Welcome back to the Malaysia Money Matters show. It's the 11th of June, 2025.
Good to be here.
Today, we're taking a deep dive into the latest financial and economic news affecting Malaysia and, well, the wider world, based on the material you've provided.
That's right. We'll try to cut through the noise, unpack the important bits, and help you understand what it all actually means.
Let's jump right in. Starting with Malaysian companies, 99 Speedmart, news about extending operating hours. Seems straightforward.
Yeah, but the impact could be quite significant. CIMB Securities, they estimate it might boost revenue by, what, up to maybe 5.8% between 2025 and 2027?
Just from being open longer.
Primarily, yeah.
Yeah.
Higher sales per store. But they're also adding 250 new stores, so combined, they're talking about maybe an 11.9% lift in core net profit for 2025. Analysts seem pretty positive.
Okay. And there was some confusion about the EPF stake in 99 Speedmart.
Right. A quick clarification. EPF didn't just buy 5%. They bought a small 0.07% stake. But that specific purchase pushed their total holding over the 5% mark.
Ah, making them a substantial shareholder.
Exactly. So they had to disclose it. Yeah. The CEO, still firmly in control, holds the vast majority.
Got it. Okay, let's talk REITs. Malaysian REITs seem to be getting some love from analysts. Why the optimism now?
Well, a big part is the outlook for interest rates possibly easing. That could mean lower financing costs for REITs, especially those with floating debt.
Makes sense.
Plus, they're seen as, defensive plays with pretty attractive dividend yields, projected maybe 5.6% in 2025, potentially over 6% in 2026. That's a decent spread over government securities.
So what are the growth drivers people are watching?
Look towards the second half of 2025. Things like asset sales or acquisitions, maybe property upgrades, and the continued recovery in the hospitality sector. Diversification is also key.
Are there potential downsides? Any risks?
Definitely. There's that proposed 8% service tax on rentals that could sting, and potential electricity tariff hikes. These might pressure some REITs, particularly those with, let's say, less prime assets.
Okay, so focus on quality there. Now, Benelec, they secured a contract.
Yes, a 2-year deal with TNB Fuel Services. Transporting coal up to 3.5 million tons a year. It's variable freight rates, payment in ringgit.
Is this new for them?
It's actually a return. They had this contract from 2019 to 2021, but not the last couple of years. So it's a good win, especially since they just got back to profitability in FY24 after some losses.
Yeah.
Should help earnings.
Right. And Capital A nearing the end of the line for their PN17 status?
Seems like it. Tony Fernandez says they're in the final stages, maybe 15-20% left to go, targeting exit by end of July.
What are the last hurdles?
Finalizing the sale of the aviation business stakes to AirAsiaX, getting approval from the Thai Stock Exchange. They have a backup plan, thus securing one more creditor consent letter, and having that RM1 billion in equity ready.
Exiting PN17 is huge for them, right?
Absolutely. It's a major barrier.
Yeah.
After that, they're eyeing listings in Hong Kong and for their brand arm, ABC International, on the NASDAQ. Big plans.
Okay. Destiny, another contract win.
Yep, a 3-year contract from Hibiscus Petroleum. This one's for tubular handling equipment and services out in the Malaysia-Vietnam PM3CAA field. Starts April 2025.
Value fixed?
No, it depends on the work orders issued by Hibiscus. But it definitely boosts their upstream portfolio and builds on that partnership. Contributes immediately to earnings, too.
NCT Alliance is buying again in Sabah.
That's right. Acquiring a majority stake, 55.72% in Gurjcore for RM36 million. But it's all paid via shares, mostly new ones.
Why Sabah again?
Expanding their land bank there, specifically in Patatan. It follows a similar deal, just 3 months back. Paying with shares helps conserve cash, keeps debt down. They're clearly betting on Sabah's real estate growth.
Interesting. Niche capital EMA's going for gold.
Literally. They've got exclusive rights now for a gold mining area in Kelantan, KK Hill, through a JV. Early estimates suggest quite a bit of ore, potentially 169,000 troy ounces of gold in situ.
Significant potential then.
Could be, yeah. They'll pay a tribute of percentage of the gold plus royalties. The investment needed isn't clear yet, but it's definitely one to watch for their mining prospects.
And Paradigm REIT debuted recently. How did that go?
It was a flat debut, closed at RM1. The broader market was a bit soft that day. The chairman framed it as a stable start despite volatility.
Was demand strong?
A bit subdued, actually. Some retail units were undersubscribed. The IPO raised RM 560 million, but that all went to the sponsor, WCT Holdings, as no new units were issued. It owns 3 malls and aims for yield over 7% for FY 2025.
Okay, some difficult news from Petronas about workforce reduction.
Yes, that's correct. They're implementing a reduction exercise, affecting about 10% of the workforce, so around 5,000 employees.
Why now?
They've described it as a necessary step for long-term growth, citing challenging conditions like, volatile oil prices.
Yeah.
Affected employees are getting a separation package that's reportedly market competitive, plus support like career coaching and financial planning.
Tough decision. Lastly, on the local front, Sarawak Energy's big solar project.
Yeah, they've formalized a deal, an MOU, with two major Chinese firms, China, Three Gorges, and Shanghai Electric Power,
For what exactly?
to study and potentially develop a massive floating solar facility up to 1,000 megawatts at the Bakun Hydro Dam Reservoir. It's a major push for Sarawak's renewable energy goals, aiming for 10 gigawatts capacity by 2030, mostly renewables.
Okay, let's shift gears globally. Bank of Japan still talking about rate hikes.
The governor reaffirmed they're ready to raise rates if underlying inflation gets near and stays around that 2% target. For now, real rates are still negative to help get there.
But they're cautious.
Yes, they have to weigh the economic impact, things like those higher U.S. tariffs that led to growth forecast cuts and also the risk of hitting zero again, which would limit their tools if a recession hits. So most expect rates to hold steady at the next meeting.
Palm oil seeing a demand surge from India and China.
It's like it, short term anyway. Prices have corrected down a bit this year, making it more attractive. An industry expert mentioned strong buying from India, especially for palm oil at a discount, and China's importers are active too, rebuilding stocks.
Will it last?
Well, the demand should help keep prices in, say, the RM 3,900 to RM 4,200 range for the next 6 months or so. But sustainability really depends on staying price competitive against other oils like soy or sunflower.
Sticking with China, but their solar industry seems to be facing some gloom.
Yeah, despite record growth numbers, the economics for the equipment makers are apparently brutal. Collapsing margins, losses, protectionism hurting exports.
And demand might drop off.
Analysts think so. There was a policy-driven installation rush, but that's expected to fade in the second half of this year. New restrictions on rooftop solar and removed price protections are contributing factors. Q3 looks particularly challenging.
Okay. Germany looking elsewhere for gas. An Azerbaijan deal.
That's right. State-owned CEF signed a 10-year deal to buy gas from Azerbaijan, up to 1.5 billion cubic meters a year. It helps Germany diversify away from Russian pipeline gas in what's still a tight European market.
Supporting investment in Azerbaijan, too.
Exactly, and likely flowing through the Trans-Adriatic pipeline. It's part of Europe's broader effort to secure supplies while waiting for new LNG capacity.
Grab big bond sale fueling takeover talk.
A U.S. $1.25 billion convertible bond sale, yes. And it immediately sparked speculation they might be building a war chest for a potential go-to takeover.
Has Grab said anything?
They denied current talks, but did state proceeds could partly fund potential acquisitions. That was enough to make go-to shares jump. Antitrust hurdles would be a big issue if a merger ever happened, though.
Right. Quick update on Tanang's Mutiara line LRT.
Good news there. All outstanding issues apparently settled. Physical work is expected to start very soon, maybe within a month or two. Main focus now is managing traffic disruption.
And the on-demand bans.
The rapid Penang service is running smoothly, apparently. 50 vans, 13 zones, steady usage, reasonable times, all for RM1 a trip. Seems to be working.
Oil prices saw a bit of a lift earlier this week.
Yeah, mostly driven by optimism around the U.S.-China trade talks. Hopes for eased tensions boosting the fuel demand outlook. Positive comments from U.S. officials help too.
But risks remain.
Always. Potential supply issues from Canada's wildfires, and the possibility of OPEC increasing supply later on. Some analysts worry they could push the market into surplus and lower prices in the second half of 2025. Plus, Iran nuclear talks are always a background factor.
Chipmaker TSMC, strong sales continue.
Very strong May sales, up nearly 40% year over year, mostly driven by that relentless AI chip demand, plus maybe some inventory building by companies due to trade uncertainties.
So the outlook's still good.
The CEO thinks so. Reaffirmed expectations for mid-20% sales growth for the full year 2025 in U.S. dollar terms. Said AI demand is still outstripping supply.
Taiwan Malaysia trade looking very healthy.
Extremely healthy. Trade hit RM 176 billion last year, up a massive 38.5%. Taiwan is now Malaysia's fourth largest trading partner. Driven by electronics, petroleum, scientific gear.
Strong synergy there.
Definitely. Taiwan's tech expertise fits well with Malaysia's industrial plans, and Malaysia's halal ecosystem is attractive for Taiwanese firms looking at Asian. Plus, Taiwan's a big source of FDI for Malaysia.
Over in the UK, the FTSE 100 hit a new high.
It did, surpassing its March record. recovered from that tariff slump, helped by a better economic outlook and easing trade tensions, especially that US-UK trade framework.
Still lagging other markets, though.
Yeah, behind some European benchmarks and US records. And there are challenges with companies maybe shifting listings away. But analysts note UK stocks are still relatively cheap.
And those US-China trade talks are ongoing.
Continuing in London, reports suggest they're going okay. Focus is on easing export controls after they stepped back from a full embargo. The U.S. hinted it might lift some controls if China speeds up rare earth deliveries.
But not on high-end chips.
No, they specified any easing wouldn't include things like high-end NVIDIA AI chips, but maybe other semiconductors. It comes as China's exports to the U.S. actually fell sharply in May.
Finally, U.S. container imports took a tumble in May.
A significant drop, yeah, especially from China. Overall, seaborne imports fell over 7% year-over-year. Imports from China specifically plunged nearly 30%.
The tariffs biting.
Seems like it, really hitting West Coast ports. Even with the current 90-day tariff pause, imports from China might keep softening as companies rethink their sourcing strategies due to the costs involved.
And that brings us to the end of our deep dive today. Quite a lot happening.
Absolutely. You really see how local company news, international trade flows, policy decisions, it's all interconnected, isn't it? Affecting investments, jobs, energy strategy, everything.
It really is. We hope breaking it down like this helps you feel better informed and ready for your day.
Hope it was valuable for you.
Thanks for joining us. If you did find this useful, please do subscribe to the Malaysia Money Matters podcast for your essential news breakdown every day.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.